Hello, and welcome to ICRC-TV's COVID-19 HR and Business Update. My name is Pandy Pridemore, and I'm the Principal Consultant for the Human Resource USA. Today's show has got a number of elements that I think you'll enjoy listening to, maybe hopefully participating on. This is a live stream, which means your questions can be sent right in. We will be more than happy to address any of them. And actually, you've heard me, if you've watched any of the other shows, you've heard me say the more engaging this is, the better it is for all of us. Today, we're going to be going over some of the updates with unemployment. A few things have changed. I just want to make sure that all of you are aware of them. And then we're going to move right over to the small business exemptions that are possible under the FFCRA programs. There's a little bit of confusion there as to what that actually means and who might qualify. So I kind of want to go over the details there and see if anyone has any questions about whether you might possibly qualify to exempt yourself from having to do some of those paid programs. Then we have two guests coming in who are going to help us better understand how the CARES Act is affecting 401k plans, IRAs, all those investment plans that we've got. And we're going to look at it from both the employer perspective as well as the employee perspective. There are things going on that you need to be aware of, and you need to know how to react to it or what's best for your company. And of course, returning to the show is my buddy Britt Skiers from the Emory Federal Credit Union. He's going to update us on any changes that may be taking place with all those loan applications and all that money coming out into the companies. And then maybe help me better understand some of the terms in regards to the small business exemptions. So again, send in your questions. We'll be more than happy to address them. So let's see if Britt's ready. Britt?
Howdy.
Welcome back. Gotta have you on the show. Gotta have you on the show.
Well, it's good to be here. And, you know, a lot of stuff is changing quickly, so it's one of those things that I think everybody's kind of curious to see when, you know, money is going to finally hit accounts, see what the new rules are going to be going forward, when the potential for opening up the economy is going to, you know, when that's going to be. I think we all are sitting around and watching the governor, you know, at 2 o'clock every day and waiting for the president to come on in the evening. And it's interesting stuff.
Well, I was talking to somebody this morning who said that one bank had received like an astronomical number of applications, and yet they weren't, oh, I know who it was. It was one of the chambers who said that one of the banks had told them that they had received a bunch, but they knew full well that not everybody was going to get funds. Is that possible?
Well, it's possible that some of the banks might cut off taking applications altogether. They've taken so many, and there still has not been clear guidance given to lenders as to how this is all going to work on the back end, how it's going to be serviced, when the funds from the SBA are going to come to the bank, that sort of thing. None of that is clear as of right now. Everybody right now should be applying for the loans if they qualify. And then we just have to wait and see exactly how quickly it all hits the accounts. Now, Steve Mnuchin, the Treasury Secretary, was talking yesterday that they've started to fund some of these loans. Now, everyone that I have talked to so far, they have not been seeing any of them funded, but that doesn't mean to say that there aren't some in other parts of the country that, you know, the money is finally starting to flow to accounts of business owners.
Well, and again, it's hitting the streets that the president is supposed to possibly even sign another bill for an extension of another, what, 250 million or billion or whatever.
Yeah, a lot of this money is already, you know, it's being applied for left and right, but they're probably not going to have enough with the 350 billion or so that they had already approved. So they are trying to go back to Congress to get an additional somewhere around, I've heard 250 billion. So we can hopefully keep this, once this money actually does hit the streets, and if we get some sort of a timeline on when we may be able to open back up the economy, I think you'll see a lot of optimism and things, I think everybody will feel a lot better.
Well, and the larger companies, the bigger organizations are going to be included in this second round, correct? So it's not even money that they're going to kind of focus towards the smaller guys, the under 500 employees. They're actually maybe earmarking this next flow of money for the bigger companies.
Well, I know since we spoke last, now the sole proprietors are now able to apply. So those applications have started to flow in too. I will tell you that a lot of banks have started to limit who can apply through them to just their customer base.
Oh, okay. I had heard that was a possibility, so it's still running true.
Yeah. So I have not, and I've also seen a couple of companies that say, hey, if you've already applied at one place and you haven't heard anything, you can always, apply with us. We're faster and cancel your other application. So I haven't seen, how that is actually working out for people. If there's really one lender that's able to get things to move through any faster than another. So unfortunately, a lot of this is still kind of up in the air as from my perspective. I don't know that I've seen any of the loans really funding for the companies that I know have applied. I know that now, you have the companies, the bigger companies with the 500 or less employees, but then, now we've got these sole proprietors saying basically, they're applying, and of course that's money they just get to keep themselves, right?
Yeah. Well, and you and I were talking a little bit earlier, documentation is extremely crucial through all of this. I mean, they not only have to have the documentation to apply, but it's just ongoing, isn't it?
Well, what's going to happen too after this is all said and done, they're going to have to provide documentation to these lenders that have taken these applications that are going to be servicing that loan. They're going to have to prove that they use the funds for the, for the reasons, that they're supposed to be using the funds for, retaining their employees and that sort of thing.
I was talking to a client over in Northern Kentucky, and she was asking me, well, where should I be keeping these documents and where should I be keeping those documents? I said, at this point, just start a COVID-19 file cabinet. Just literally payroll records, everything that is associated with anything going on with COVID-19 should be kept completely separate. Don't get into a situation where you're filing it in with regular personnel files or in with regular payroll and then have to dig it out at some point, because it's inevitable they're going to have to substantiate, right, with documentation.
Exactly. Don't think that this is all just going to be free money and somehow you're not going to have any, if you want it to be forgiven, you're going to need to, prove what they want you to prove. So definitely keep good records, keep all your payroll records, you're going to, don't, whatever you do, don't think that this is just going to be free money and they're not going to come back after it. It's the government.
I'm
a little concerned with that, just shifting gears to more personal stuff, just individual personal finances. Some of the folks that have heard that, oh, I can defer my mortgage payments. 90 days or 6 months or 12 months. I'll tell you, right now, they're saying that, Fannie Mae and Freddie Mac loans are going to be able to be deferred for, 6 months to 12 months. But I'm going to tell you, if you can pay your mortgage, you need to pay your mortgage. I just really have a feeling that you're going to end up with more issues down the road by taking that. If you're truly in trouble, you've lost your job, you've lost your income, absolutely take advantage of, the benefits of being able to defer some mortgage payments and the like. But, just like with unemployment and that sort of thing, if you're going to have a job to go back to, you really need to go back to your job. Don't do this deal where I'm going to make more money through the unemployment than at my regular job. So I'm just not going to go back. I'm hoping people won't be doing
that additional $600 is enticing.
It is.
Additional $600 a week. And I'm hearing it from employers saying, my employees are asking me to lay them off. They really want to be laid off. And going back to you can't, if you've got work for your employee, work the employees. If they decide on their own that they don't want to accept your work and your job, and they decide to self-quarantine or yes, stay home because they feel they just don't want to commit. That's job abandonment. I mean, that literally could almost be, in almost every single case, job abandonment. If you have work for them, you have payroll for them, you're doing your part as an employer, and the employee decides to bail on you because they think it's greener on the other side. I'm telling employers, oh, keep them on the schedule. Keep them on the schedule. And if they don't show up, if they're not calling in, that's job abandonment, and that does not warrant unemployment. And It doesn't warrant the extra $600 that's out there either. That's a good caveat, actually, because I did run into some updates within unemployment. I kind of wanted to go over those for employers that want to be able to answer questions for their employees in regards to unemployment. They're on the Ohio unemployment site, which is the only one I went to. There's an actual link that's telling employers to take paperwork off that site to give to their employees if they're laying them off, if they're furloughing them, if they're terminating them. Remember, if they're being removed off your payroll because of no fault of their own, they are eligible for unemployment in most cases. So employers do have the opportunity to go on there. I never tell an employer to tell an employee how much money they're going to get. Please do not do that. Have an employment office do that. Let those services tell the employee what their benefits are actually going to be. And here's why. I had a phone call the other day, and a woman said, well, I was put on unemployment, but now I'm being told that I've been overpaid and then I have to give some of this money back. Now, this is already, a few weeks into this. And I said, well, okay, did you receive any other funds from your employer? And she said, well, yeah, I had a commission check that came through a couple weeks after I, had been laid off. I said, but those are funds and those are taken against the unemployment. Well, but I'm still unemployed. Well, the employer tried to give her a super soft landing and, set this impression. And we all know that perception is 99% reality. She expected that she was going to still continue to get these commission checks, as well as be able to collect the $600 plus the unemployment. And it just doesn't work that way.
Unemployment folks are on that more than people think.
Oh my gosh. But on that same website are questions and answers, which are just absolutely wonderful. And question 11 has been updated, stating, will workers qualify for unemployment benefits if the virus causes an employer to shut down operations? So what is this saying? This is saying that if by some odd chance someone is considered positive for the virus and the health department or government entity comes in and says, you all have to be quarantined for 14 days. You all have to go home. You've all been highly exposed. You have to stop operations. Governor DeWine here in Ohio has said, yes, you will all be eligible for unemployment. It was no fault of your own. None of you even have to have the virus, but for the 14 days you're out, we've got you covered. And I think that's well worth noting. Question 13 is, are self-employed individuals and contractors eligible for unemployment benefits? And again, updated, they are. 1099s, self-employed individuals, contractors. And what's so interesting is it's for 39 weeks, where normal unemployment is only for 26. Self-employed and 1099 contractors will get 39 eligible weeks, plus the $600 incentive on top, running from January 27th through the end of the year of December 31st. So, my gosh, that's a wonderful safety net for these small businesses and self-employed individuals who may even have a harder time, getting back up on their feet and getting their businesses reestablished. So I just am very excited about that for a number of people that I know have tried really, really hard to keep their businesses going, knowing that their clients are shutting down around them. Yeah. And then question 19 is, if an employee is in mandatory quarantine because of suspicion, not symptoms, suspicion of having the virus, will they be eligible for unemployment benefits? And they have, Governor DeWine put an executive order saying, yes, employees under suspicion will be given unemployment if quarantined. Again, I sometimes just sit back and go, who are these people? I mean, where are all these generous ideas and all this stuff falling forward? Because nobody should be complaining about anything in regards to.
Well, yeah, and on the mortgage side, that, like I was saying before, they didn't even require any kind of, they're not even requiring any kind of proof that you were indeed affected by this. I mean, you just have to say, yeah, I was affected. And then, you can, defer your payments for, but I could just see down the road as people, especially with lending, how that tends to work. If you go down the road, if rates go down really low and, you want to try to refinance or something, and they say, well, have you been, how's your payment schedule been? I know they're not supposed to be reporting this to the credit bureaus, but I could still see them asking, hey, did you participate in any kind of a forbearance situation? I just think really we need to plan on everything getting back on track, relatively quickly. And if your income comes back relatively quickly and you have the means to pay your payments, you really ought to take as little of this help as possible and continue to pay your payments on time.
I completely agree. But you know what, we're talking about compensation of every week or every month, but the investments are what we consider to be our nest eggs, and our 401ks, our simples, our IRAs have taken a tremendous hit. And our next guests are going to help us better understand what the CARES Act is doing to kind of help employers maybe make some better decisions or make some changes to their plans. I can't speak to it correctly, I can tell you right now, but I did invite two people who certainly can. Todd Wyatt is the Director of Employee Sponsored Retirement Plans. I read that straight off my sheet, Todd, with Saxon Financial Services. And he will be joined by Eric Bokesh with the Pinnacle Group. Gentlemen.
Thank you, Pandy. So the CARES Act provided a couple of options for employers to consider for their employees in the areas of distributions mainly, allowing them access to funds that they might not have had access to in the event they have issues with coronavirus or financial hardships with coronavirus. So I'll briefly walk through that quickly. Basically, there's expanded distribution rights for participants of up to $100,000 as long as they have $100,000 in their account. And if they're not 59 and a half or older, they can take those distributions penalty free. Normal distributions from a retirement plan has a 10% excise tax. So that's being waived by the government for this. But again, it is coronavirus related. So people do have to qualify. They can't just say, oh, gee, I just, I'm stressed out, so I'm going to take money out of my account. So they have to either been confirmed having it, their spouse or other dependents having it, or they can have to prove financial hardship due to the virus.
Wait a minute, we're all stressed out with this. How is that not a qualifier?
Well, I'm not a doctor. I don't know. So that's the big one. And, that applies to all retirement plans. So simple IRAs, traditional IRAs, 401ks, 403bs, those distribution rights are an option. And the key word is an option. We'll talk about that in a minute. The second part of this is they expanded loan features for 401k and 403bs, where they will now allow maximum loans up to $100,000 if people have that in their account. If they don't, up to 100% of their vested account balance can be borrowed now instead of 50%. Again, that is an option. It doesn't have to be done. And if your plan doesn't have loan options, it's not going to get done. But if you already had loan provisions, you can expand your loan provisions if you want to as an employer.
Oh my gosh. is, with these other programs, there have been posters and there's been announcements and there's been communication. I personally have not seen any communication at all to the employees about this. How are the employers finding out about this?
Through their current administrators and record keepers. And a lot of record keepers have already instituted what's called negative consent. So they're sending emails to the plan sponsor basically saying, unless you choose not to add these provisions, we're going to add them to your plan. So a lot of providers have already done that. If they haven't done that, they're still sending communications saying, do you want to add these features to your plan? So it's an actual choice by the plan sponsor whether these things actually get added to the plans or not.
Okay, and give me the definition of the plan sponsor.
It's, GM is the plan sponsor of the GM retirement plans, as an example. Saxon Financial is 401k plan. Saxon Financial is the plan sponsor. It's the business. It's the business is sponsoring a 401k, 403b, et cetera.
Okay. How high of a priority should an employer rate this with everything else going on right now?
Well, the one good news about the legislation is that they allowed plan amendments to be done retro all the way up until the year 2022.
Whoa.
So the government realized plan sponsors might have other things on their plates temporarily, like possibly applying for loans and other things and trying to keep their business afloat. So at any time up until the year 2022, they can actually do a retroactive amendment to the plan going back to March 27th of 2020, which would then allow these provisions to be added in. Now, when we talk about the distributions and the loans, they have to be made in the year 2020. So in other words, you can't take these expanded distributions or expanded loans in the year 2021, okay, or beyond. So it's only applying for it's only applicable for distributions and loans this calendar year.
Are there any fines or is there any trouble that employers can get into for not communicating or making some of these decisions?
No, it's interesting because our clients, and I've spoken with most of our existing clients, our clients are kind of on the fence. We got about, I would say roughly about 40% of our clients not adopting them. We got about 40% or 35% of clients that are adopting them. And we have about 10-15% of clients that haven't made up their mind yet. I think the fear with the clients are, people can totally wreck you used the word nest eggs before, can totally wreck their nest eggs by taking advantage of this, where, we do have now expanded unemployment at a higher rate than normal unemployment. So some plan sponsors are taking the approach, we don't want them to ruin their nest egg. They're going to still need this money down the road. We have other employers saying it's their money. Let's just, add these and give them that access if they need it.
And they have full authority to make that decision on behalf of the employee.
Yes, the plan sponsor has full authority, correct. Now, this decision, the interesting thing about this decision, Pandy, is, some decisions that plan sponsors make with respect to their plans and their participants are fiduciary decisions, meaning they have liability consequences.
Yes.
This decision of whether to add these features or not is not a fiduciary decision. It's a settler decision, which means the business owner will bear no liability, fiduciary liability with respect to the decision.
Okay. Well, prior to all of this, well, I guess it was fourth quarter of last year, I attended one of your seminars in regards to the Secure Act.
Correct.
How are these two, are they complementing each other? Are they conflicting with each other? Are they running parallel? What's going on with all that? Because there was a lot of changes under that. Yeah,
I don't think they're conflicting at all. Like I said, these are expanded distribution rights, which the Secure Act didn't address. They left the distribution limits and the penalty if you're not 59 and a half and all that was all there, even under a Secure Act. Basically, this is just an event situation that the government added this in specifically for COVID-19. Again, you're not going to have expanded loan rights to go buy a boat. You're going to have expanded loan rights to feed your family, or you repair your roof if the insurance isn't covering it, or whatever, because you have financial situation from COVID-19, or you're actually sick from it and need the money for medical bills.
How does an employer find, or how do we convey to the employees what that exclusive list of use is? I mean, is it published somewhere? Are the employers responsible for giving that to the employees?
Well, no. What will happen is employees will apply for these distributions or these loans with the plan administrators. The plan administrators will, ask for whatever documentation is necessary, and the employee is either going to be eligible or not eligible for the expanded distribution. So the employer doesn't even make that decision.
Oh, okay. Okay, but we're going back to documentation. Documentation is very important. Is there any extra documentation maybe to substantiate the request? Is that going to be required?
Sure, and we have that today under hardship rules. So whenever somebody applies for a hardship withdrawal, they have to send in with their application proof of the hardship. They can't just say, this happened, give me the money. So.
Okay. Eric, from the employee's perspective, how should the employees be viewing this right now? What kind of advice would you give the employees?
There we go. Patty, I think the key from an employee standpoint is if it's necessary to access the money, it's a last resort. As Todd had mentioned, this is their nest egg, and this is something that they've been working for and saving up over the course of their working career. And at this point in time, I think we're going to get through this as a society. I think the biggest key is don't create havoc for your future by accessing this money, because it may be easy to get to, or easier to get to at this point in time.
Well, Britt just brought up a really good point. If your mortgage is behind and you've got some of these big, student loans we can kind of push off, but your mortgage, food, is that a reason to borrow against the 401k?
I would look at other resorts before you pull that trigger, because I know in your last seminar that you did with Britt, you do have the ability to delay your mortgage payments, but at some point in time, they all come due. So if you delay it for 3 months, all right, now I owe, my three mortgage payments that I delayed. All of a sudden, if this is the last resort, then I think you have to go that route, unfortunately. But don't, get the amount that you need. Don't get above and beyond that, because obviously you're going to have to pay taxes back on those dollars that you are accessing from the plan.
That's a great point, Eric. And I would add too that, the worst time in the world to liquidate your investments is when they're down.
Right.
This is not the time to pull out money. The idea is not to buy high and sell, and sell low, right? So, a lot of these folks don't realize that when they're tapping into that 401k, some of those funds may be, although the market started to come back just a little bit. We've had some up days and so forth, but by and large, it's down from where it was a month or two ago. And, you certainly don't want to be pulling money out, when your shares are, are down. So, using every possible resource you can to prevent from pulling from your retirement, I think would be a wise thing. And again, if you have the ability to defer your mortgage payment, do that, and of course, make sure you understand how that actually looks. Like you were saying before, there's one of the multiple ways that a forbearance can end up, being worked out for you. One is you make no payments for 3 months, and then in the 4th month, you owe the 4th month plus those 3 payments, which is, I could see that being a hardship, like you were saying. Hopefully more lenders will go to the route of, okay, you defer 3 payments, and in the 4th month, you just pick up making your normal payments, and we put those 3 months at the end of your loan. That's how I hope more of them will do this, and people will be able to tap in these resources, get these loans, and they'll all be hitting in the next couple of, 2 or 3 weeks. And hopefully they'll have the ability to kind of float that, and we can be back to work in a month or two, so that, we're not tapping into that and robbing from our future like that.
Absolutely.
How many times can somebody pull money from their fund? Is this a one-shot deal? I mean, they're anticipating this COVID thing to, take through to the end of the year. Do you get multiple opportunities?
I think,
Go ahead, Eric.
I was going to say, I think you have the ability to go and access it more than once. I think the key is, again, that limit is the dollar, I think, is the kind of the bookend, if you will, in terms of how much you can take.
Is there an opportunity to pay it back as well? Is there, I've heard that some loans you can, I don't know, I'm just guessing, but I thought someone said that you had an opportunity, like a window of like 90 days or something, to put money back in without being taxed. Does that exist as well?
So obviously with the loans, if you're doing the loans have to be repaid back, usually over a 5-year period. But if you're doing the distribution, not only are they waiving the penalty, they're giving you the right to pay it back over a 3-year period of time. And if you pay it all back within a 3-year period of time, you will not be taxed on it. Okay, so that's one of the options. If you take that distribution, you're going to elect either it's a permanent distribution or I'm actually paying it back over 3 years. Okay, if you take the permanent distribution route, you will be taxed over a 3-year period of time. So there's some deferred taxes there as well.
Well, if you're taking $100,000, that's a chunk of tax.
Right. I don't think, well, first of all, most people, I wish most people had $100,000 or more, but the sad fact is that the average participant account balance is probably about $50,000. Okay. So, we have a retirement crisis in America that we're trying to solve, but it's, the percentage of the population that's even going to have this much money to take is very small. I think it's more of the fact that the government's just throwing a lot of things, a lot of solutions, a lot of programs at this problem. I don't think that you're going to see too many withdrawals of $100,000 from 401k plans.
Why would you need that for a couple of months of bills?
you wouldn't, Britt.
Well,
My lifestyle just drastically got more expensive, right?
I need to get that yacht.
Yeah.
No, I'm gonna correct both of you, because I have had clients that have had multiple mortgages on their homes for their businesses. So those individuals put themselves in very tight positions. And I'm thinking of the one in particular who had he had 3 mortgages total, 2 mortgages. If that were him today, my gosh, and his organization would not bounce back immediately. It would not have, so it would have taken him a good 3 to 5 months of gradually working his way back in. And $100,000 may not be completely unreasonable if he wanted to keep the doors open. But again, not knowing, if he would actually be able to make the PPP or some of these other loans.
Or defer the payments, I would rather you take advantage of those. That's what those are for, rather than, paying the mortgages from your 401k.
Yeah.
I just wanted to add one thing to that, Pandy, is that, the whole point of this expanded distribution and loans is not really to take care of the business. I'm going to caveat with that, a lot of small business owners, that is their life and everything, and therefore they commingle personal and business. I get it. But the point of it is to offset medical bills if you have COVID-19. It's to pay for final expenses in case someone should pass away from COVID-19. It's to provide your financial relief because of what's happened with COVID-19, to pay your bills and whatnot. The government really didn't roll this out saying the small business owner needs this. The government rolled this out for the workers of these businesses, because the small businesses have these other things that they can do to keep their doors open.
That makes complete sense. Eric, is there any advice that you would give to the average employee who didn't realize this was available, but may want to seriously think about this? I mean, is there any wisdom you want to give to them real quick?
Yeah, I think the key would be is if they have a plan in place, talk with their advisor on their plan and consult with them. That's what they're there for. So they should be reaching out to their plan sponsor and making contact with their advisor and consulting with them to go the best route and give them the best advice.
Fantastic. Guys, thank you. Thank you very, very much. There's no possible way I could have spoken to either one of those plans. Britt, do you even want to try to speak to that? Don't you have enough on your plate?
Yeah, there's, I think so far I'm okay.
I think so too. You know, again, we put a lot of emphasis on documentation today. So I just wanted to go over real quick documentation that seems to still be a little bit of a confusion under the Families First Coronavirus Response Act. We've got two major plans under that, or two major programs under that act that provide paid leave for employees. And let's go over that documentation real fast. I just want to make sure that everyone watching, if your business is still open and you still have people active on your payroll, you have this poster hanging up which explains the program to the employees and at least gives them some intellectual comments and ways of discussing it with you. We still have a lot of employees who just think that they can just say, I'm afraid, or I don't want to come into work, or I'm scared, and they think that all this money is waiting for them. It's not. And because of that, the IRS is requiring documentation to verify that any of the programs, either the Emergency Family Medical Leave Act or the Paid Sick Leave, are directly associated with COVID-19. Just as Todd mentioned, you know, all this is all about what's currently going on with this situation. And again, because the IRS is offering tax credits to reimburse employers for the funds paid out on these programs, they want documentation verifying that the money went for the right reasons. So if you do not have an actual request form, which the Department of Labor and IRS, neither one, in their typical fashion, neither one of them gave us a structured format to follow, but Carl and I came up with this request form for both plans, as well as a response form. And like I said, there's no set guidelines on specifically how that format has to look like, but we've done one for you. If you want it, please let us know. We'll send it to you, but make sure that you're utilizing this, because there's a chance that if you get audited by the IRS, they're going to want to see collected documentation on the request and that you've collected documentation verifying the credibility of the request. Was there a daycare involved? And obviously, no, they closed, but when did they close? Was somebody actually told by a medical provider to quarantine themselves, or that they had valid symptoms, or did they actually test positive? That's all documentation that you now can collect and ask for. Our last show, we went over all the different questions that you're permitted to ask as long as it's involving COVID-19. So make sure that
do we also have to prove that we're unable to telework?
Oh, gosh, yeah, yeah. But you know, very truthfully, and going back to Carl's comments last week, if you're going to challenge a mother with 3 children who has to homeschool as well as work, that she can't or can telework, you need to second guess that one. Or go teach the kids yourself. You know, another document too that I saw a number of emails on was the documentation for essential workers. And, you know, there's a political comment to this document, but it isn't a bad idea. I know it's kind of scary for some people to think that they have to carry around documentation verifying who they are and that they are a citizen and that they're, you know, that they're actually working. But there is a format. We've got it for you if you believe that your workers need to have it in their vehicle, especially if they're crossing the state line. I've got a number of transportation companies who have been concerned because their drivers are just over, you know, just over the road, daily drivers, but they're crossing over state lines and they don't want them to have to be quarantined. They're not really getting out of their trucks. They're just backing up to the docks and they're leaving. So if you have any concerns around that, let us know, because we can help you with that as well. Well, now to our biggest conversation, Britt. I love this topic because I have gotten into some real interesting conversations with small businesses who have challenged, or let's say they've embraced the whole challenge of whether they can exempt themselves from the Families First Virus Response Act. I get so tired of saying that, FFCRA. There is a loophole. I mean, there is a way to say, if I'm 50 employees or less, I might be able to be exempt from offering a portion of the FFCRA as paid leave. So I kind of wanted to go over some of these guidelines because I was hoping that maybe you could help our viewers better understand what some of these details actually mean. If you are an employer of 50 employees or less, and let me clarify that too, 50 employees is 50 heads, 50 bodies. I had one person say, well, I don't have 50 FTEs. We're not counting FTEs. We're talking bodies. If you have 50 bodies coming in your building and working or less, if you even have temp workers coming in and you have temps that come in on a regular basis, we're counting them as well because they are part of that head count. You could possibly provide evidence that the providing the child care portion of both the paid sick leave as well as the emergency family medical leave could jeopardize the viability of your organization. Now that's really difficult language. So the Department of Labor, who oversees all this, and to be more specific, Wage and Hour will take all complaints and concerns about this, have put out 3 guidelines for you. And I want you to really think hard about this. First one is, if you're providing the paid leave for childcare reasons and it would result in the small business's expenses and financial obligations exceeding available business revenues and cause it to cease operating at a minimal capacity, you might be able to exempt yourself. If the absence of the employer or employees requesting paid leave for childcare reasons would entail a substantial risk to the financial health or operational capabilities of the small business because of their specialized skills, knowledge of the business, or responsibilities. Number 3, if there's an insufficient number of workers who are able, willing, and qualified, and who will be available at the time and place needed to perform the labor or services provided by the employee or the employees requesting paid leave for childcare reasons. It specifically says in the regulations that you don't have to meet all 3, but it doesn't necessarily mean that if you hit 1, you're considered exempt. And going back to our conversation about documentation is definitely needed to verify that you are exempt from providing this sick leave.
Right. You can't just say, yeah, it just didn't work for me.
Well, and Britt, this is where I think you can really help companies understand. When the first one talks about obligations exceeding available business revenues and could cause operating at, issues at a minimal capacity, what are they actually saying by that? How should a business owner look at that and try to put that in real terms?
I guess if it truly jeopardizes your cash flow to the point where you don't have the cash flow to, keep running your business.
Okay. And the second one talks about an individual with a very specific skill set or a set of responsibilities. One company called me and said, I can't let this person go out on sick leave, stay home and watch her kids, due to the childcare. She's my only salesperson. And if she goes out for 12 weeks,
would shut your company down, basically.
Yeah, he said, I have nobody else to do the sales. I'll have to go out and do the sales. And I'm not certain that I have the relationships that she does. And that's a valid case. That
Right.
would that would almost hit both of those points, would it not?
Yeah, I mean, I would just also be concerned though, if you're trying to force that employee to come to work and, if they don't feel safe, I mean, what kind of issues does that cause them with, that might be a Carl question.
I was gonna say, you're using the word safe again, and that leads back to the fear and the self-quarantine, and we have very, very definite points on that. Stay away from the word safe. Everybody's safe and secure, right?
Right.
And then the third one seems pretty common sense. I mean, if you've got 2 people who are already out on paid sick leave and you only have 5 people total, if a third asks to leave and you've really got your operations up and running, you're in dire straits there with 2 down, that might be a really good reason not to be able to offer it.
Yeah. Yeah, I would think so. I mean, at what point, I mean, where you just have no ability to operate whatsoever? I mean, I guess, now I don't know that if it's, if you as the owner, I mean, if you have the ability to continue some of those duties, I'm wondering how they would view that.
Well, and again, this is where, as you and I have talked about in other situations, where the government's kind of gray. When you and I like things black and white, that gray section comes in there, and that's why I keep going back to Carl's terms of the rule of reason. You really kind of sometimes have to go back to the rule of reason. But I would not recommend to any small company to just jump into here and just assume that you don't have to offer that program. And again, I have to stress, no matter who you are, no matter what your concerns are, you still have to offer the paid leave for showing symptoms or being quarantined by the government. Those top 3 reasons on the PSL, you have to do those. Mm-hmm. So if you want a copy of these regs, we'll be more than happy to send them to you. But before you start telling your employees no, please make sure that you have partnered with somebody and read through these to make sure that you can justify it down the road. It takes 1 phone call. Anyone who's ever worked with me knows, I will tell you right now, Wage and Hour doesn't expect any proof of anything. The Department of Labor is so overwhelmed right now. They're assuming that everyone's guilty. They're just, even with FLSA concerns, you pretty much just have to get your checkbook out if you get turned in. So it's a phone call to the agency and then a letter coming to you as the employer saying you've been charged. So get your documentation in order, make sure that you can prove what viability you have with the company and how it's been jeopardized and what your revenues were to begin with and what they weren't and all the other details with that.
Definitely a time to keep good records.
Oh gosh, I was talking to somebody the other day and we were talking about how important it is to make absolutely sure that your payroll company is providing the highest level of service for you. The number of records and reports that are being demanded right now just around that, attendance purposes, keeping track of FMLA, because now all employers have to keep track of FMLA with this expansion, and coding things correctly so that you know that this absence is a COVID-19 associated event versus just a regular birthday or a floating holiday or something like that. Because remember, your life is actually the normal life is still going on at the same time. So yeah, it's documentation and records are vital at this point. Well, gentlemen, have we forgotten anything? Any last parting words from anyone?
Well, I just would like to just remind plan sponsors, business owners, you do have to take some action with this. Please, if you have not received emails from your record keepers or plan administrators, please reach out to them so that you can, make a choice for you and your employees as opposed to letting somebody tell you this is what our default is. So please take action.
Thank you. Eric? Oh, I've got to practice reading lips. I've got to get better at that.
I'm good. The one thing we didn't bring up on the CARES Act is RMDs. So if you have to take an RMD, they delayed it for this year. So no RMDs are required. So.
Thank you.
Yep.
Thank you. Britt, how many more changes do you think are down the road for the CARES Act?
Oh, who knows? I mean, we're still trying to figure out exactly, truly how everything that they've already put into motion is going to really work, right? So hopefully we get it all figured out in the coming month or two. And hopefully all the money really truly does start to hit accounts and people start to get some relief. And I also hope that we get a plan for reopening soon.
Absolutely. Our next show, I think that's what we're going to do is next week, where we're going to talk about what companies need to be looking at today in preparation for 2 months from now. Hopefully, I don't want to say 3 months from now, but let's say 2 months from now. I think whether we're talking about efficiencies and processes or whether we're talking about headcounts and policies, I think we need to start thinking in a positive mode that things are turning around and we are going to open our doors again. Well, I want to again, Eric Bokesh, Todd Wyatt, Britt Skiers, guys, thank you so very, very much for coming and talking with us today. Any of you are available. So if any of our viewers want to reach out to either one of you and have a continued conversation, I know that these guys are very, very open to it. And all you have to do is let ICRC-TV know or contact these guys directly. They'll be more than happy to walk through anything. Again, ICRC-TV, what a phenomenal resource you guys are. Thank you so much for giving us this opportunity. My last message to all of you this week is just a reminder. Do not try to go through any of this alone. Do not guess. Do not get so frustrated that you're ready to just hang it up and stress yourself out. Because remember, when you're stressed professionally, you're going to go home and stress personally. And your family needs you to be 100% when you go home. So reach out, grab your insurance brokers, grab your employee benefits brokers, talk to your 401k brokers, talk to your bankers. Gosh, please talk to your bankers. Get your labor law attorney or your consultant on the line and walk through this stuff with them. That's what they're here for. And together we're going to be able to make the right decisions for you and your team, which will then be a good decision for you and your family. My name is Pandy Pridemore. I'm the principal consultant with the Human Resource USA. We hope to see you next week. Thanks.